Why is the crypto market down today? The cryptocurrency market is down today as investors wait for Powell's remarks on the amount of the upcoming interest rate hike in the state of the U.S. economy, as well as the correction of Bitcoin and stock prices. The crypto market is down today as market volatility rises ahead of the Fed Chairman Jerome Powell's post-Federal Open Market Committee (FOMC) news conference on February 1, when he will discuss the forthcoming interest rate hike and his thoughts on the U.S. economy. Bitcoin BTC, $23,000, which jumped 43% in January, and Ether ETH, $1,645, retraced some of their recent gains after reaching new highs for 2023. The key downside catalyst appears to be investors' concern about the approaching FOMC interest rate decision, and comparable pullbacks are being witnessed across the stock market, which is down. Because of the uncertainty around the FOMC decision, Bitcoin had its second-best January on record. Celsius's bankruptcy examiner submitted a 470-page report on the usage of customer funds in a Ponzi scheme on January 30. In conjunction with the statement on January 18 that the U.S. Department of Justice took enforcement action against Bitzlato and increased pressure on some participants in the crypto sector, Binance began to block specific users' accounts, and crypto legislation is likely in the crosshairs. After initially gaining from a consumer price index (CPI) print that showed inflation dropping faster than expected in December 2022, Bitcoin and stock prices began to cool as retail data fell short of forecasts and earnings fell. Cryptocurrency prices remain highly correlated with the Dow and S&P 500. As previously stated, macro and crypto markets surged following a better-than-expected CPI report, but residual concerns about the health of the U.S. and global economies reappeared as earnings revealed a downturn in corporate profits and consumer demand. Most major banks continue to forecast a strong recession in the United States in 2023. Despite the fact that the FOMC interest rate hike is likely to be 50 basis points, key stock indices slumped in anticipation of the announcement. Traders may speculate on what the statement may include in order to detect indicators of a pivot. U.S. crackdown with unclear regulations ripples through the crypto market. The cryptocurrency industry and authorities have a long history of disagreements, owing to numerous misconceptions or skepticism about the true use case of digital assets. On January 31, a court-appointed bankruptcy examiner issued a damning report on Celsius, revealing numerous flaws in the company's operations. According to Shobha Pillai, a former federal prosecutor, customer deception has existed since the discovery of Celsius. Pillai implied that Celsius was a borrower of Tether USDT, $1, in her research. Paolo Ardoino, CTO of the biggest stablecoin in the crypto sector, refuted these claims. The Russian exchange Bitzlato was shut down by the U.S. Department of Justice on January 18. The DOJ's first declaration hinted at tough measures against the cryptocurrency industry, but it was non-specific. Due to the investigation into Bitzlato, the largest centralized exchange, CEX, Binance, made the decision to block some accounts on January 30. Binance claims that funds are safe, although FinCEN classified Binance as one of the top Bitcoin counterparties of Bitzlato. The debate over the framework will continue until April 30, 2023, despite the UK Treasury having published a report on it on February 1. Without a working framework for the regulation of the cryptocurrency industry, different states and countries have a wide range of divergent laws regarding the definition of a legal payment system and the classification of cryptocurrencies as assets. Many observers think that until a more broadly accepted set of rules is passed, the mainstreaming of cryptocurrencies cannot take place because the absence of clarity on this issue inhibits growth and innovation within the industry. Although the Commodity Futures Trading Commission, CFTC, has advocated for more transparent regulation, it is unclear how quickly these reforms will occur. In its plan for cryptocurrencies, the Biden administration recommends discouraging pension funds from making high-risk investments. Investor sentiment has a significant impact on risk assets, and this trend also applies to Bitcoin and other cryptocurrencies. As of now, the prospect of unfavorable regulation of cryptocurrencies or, in the worst-case scenario, an outright prohibition continues to have an effect on their pricing on a practically monthly basis. Recently, regulators have focused on Gemini and Digital Currency Group because of the EARN program, which has the potential to significantly harm the cryptocurrency market. Sam Bankman-Fried, the former CEO of FTX, may have established a negative precedent for cryptocurrencies through his trial.